Yeah.
Hey everybody, welcome back. Scott DiGregorio and Edgardo Ballantyne here with Primary Residential Mortgage, back for another Facebook Live. Man, what's going on, brother?
Doing good, man. Doing good. We're here in the Naples office today. Thank you for coming down here.
Yeah.
And
The traffic sucked, by the way. Just throwing it out there.
it's been bad. It's been really bad, but we love you all snowbirds. We like you being here.
Thank you for
We
helping
like
pay
you
for my
being
kids'
here.
college.
Yes, yes. So what do we got today?
Well, I mean, we got questions that we could get to here in a little bit, but
Okay.
I wanted to talk about. Frankly, it's funny. I did my taxes.
Okay.
Right. And it's interesting how
the new tax plan.
Exactly.
treat
I mean,
you.
well, the first thing is I had somebody who was on my team, AJ, came to me with a tax return, and I'm like, that form's all screwed up.
What is that?
So I got to relearn how to analyze taxes. But what was interesting was this, and a lot of people don't realize it.
Right.
The taxes actually enabled me to qualify somebody who didn't qualify.
Okay.
Okay. So when you are an employee, right? If you're W-2, you have unreimbursed employee expenses,
Sure.
right? And those expenses are on a form called a 2106.
Well, are they?
Was on a form called the 2106, and that form's gone now.
Yeah.
So check it out. So I had somebody that was commissioned, and I had to deny them because they wrote off a whole bunch of expenses.
Right.
Now with the new tax plan, you no longer need tax returns on a commissioned person. You just work off of the W-2.
That's right.
So we took $40,000 in write-offs, I think it was, and they vanished. And all of a sudden, somebody who didn't qualify 6 months ago now qualifies. So if you're commissioned and you were turned down because of your write-offs, two pieces of news. One, no more write-offs. You're going to give the Uncle Sam more money this year. Bad news. Good news, you probably now qualify for a mortgage, so you could give us a call. So I thought it was pretty cool.
That's cool. Now, just to clarify, if you're commissions and you're W-2,
Right.
we don't need the taxes.
Correct.
Now, if you're commission and you're 1099, like our realtor partners
Sure.
and people that are private contractors, then at that point we do need their tax returns.
Exactly. And the difference is self-employed versus non-self-employed.
Correct.
Right. So, but anyway, it's always looking for angles. People that didn't qualify yesterday might qualify today, and it was cool.
That's right. So
It
that's
was cool.
great. That's great. And then there's a lot of those.
Absolutely.
There's a lot of those.
Absolutely.
Well, we were in that boat.
I was.
Where we would write a bunch of stuff off because we're W-2 that now we can't. So
Exactly.
So I'm glad the tax return worked out for you and for your client as well. So one of the interesting questions that I got during the week, and it's not one of the questions that we got in that we got sent to us, but that I received during the week was a couple of people actually asked me if it was better for them to do a home equity line of credit versus a cash out refinance.
Absolutely.
Which is a question that we get quite a bit. And what's the answer to that? The answer to that is no. It's not always the same answer, right? We need to look at a couple of things. We need to look what they want to do with that money, for how long they're going to keep that debt.
That's the question.
So yeah. So how long are they going to be able to, or how fast can they pay this, and how fast do they want to pay this? So for that particular person that asked me that this past week, they were going to pay it in around 4 years, and I did a total cost analysis on both loans. The home equity line of credit with the good and the bad. The good being it's less expensive as far as getting the loan,
Sure.
right? There's less cost involved into the loan. The bad part about this loan is that the interest is variable.
Exactly.
Right? So, and with this new climate that we're in, we expect the interest to go a little higher.
Sure.
So at least that's how I did the calculations. And then with the cash out refi, the good part of the cash out refi is that there's not going to be that variable interest. The interest is going to be fixed and at a low interest rate.
Mm-hmm.
And the bad part is that we need to add those closing costs. And when I did the cost analysis on their particular situation, the break-even point was about 5.5 years.
Which it's funny you said that because obviously I'm running those numbers time again because we're also running
Sure.
numbers to pay points and not to pay points.
Correct.
And man, time and time again, 65 months is just where it comes out to. So, I mean, that's just a really common answer.
Yeah.
And that's the thing. I tell everybody, how long are you in this debt for?
Right.
Because so many decisions, what we're talking about now, paying points, etc., so much of it comes down to what is your exit strategy.
What's your exit strategy?
And I think that's where that conversation has so much value.
Right.
Most people don't think like that. They think today.
Or just the payment, or
Right.
So in her particular situation, she was going to be able to pay between 3, worst case scenario, 5 years, and this was her forever home. So she wanted to stay in this house forever. Now, at that point, I also took advantage and took look at the house, at the loan that she had at the moment.
Of course.
Because sometimes it would make sense to do the cash out refi, not just to take the money out, but also to get into a better loan program
100%.
or into a lower interest rate or whatever. And in that case, it just didn't make sense for her to refinance her existing loan. And if she was going to pay it within 3 to 4, 5 years even, it didn't make sense for her to do a cash out refi.
Absolutely.
So I sent her to a partner of ours, and she's getting the HELOC. She's thrilled.
Yeah, and that's the way to go. And you know, it's interesting. Probably close to 50%, somewhere between 25 and 50% of the refi inquiries I get, I usually tell them not to refinance.
Yeah.
So often it's just not sensible to do so.
Yeah, and look, what we do is we do that total cost analysis. So you're not only taking my word for it, but you're actually looking at how those numbers are going to compare. And we also dig a little deeper on why you're doing that refi. Does it make sense to do the refi? Can we maybe go ahead and do the cash out refi and put other debts there, do some debt consolidation? So there's a lot of things that we look at, and like I did last week, if it's not if the right answer is not to refi and maybe go to another product, we're more than happy to give
Absolutely.
you that.
Of course.
And also, that's where the yearly reviews come in handy.
Yes.
For those conversations.
Yeah.
So even if you close a loan with us a year, 2 years, how old are you? 50 years ago. It's worth still calling us, and I know my clients do it. I know your clients do it as well.
Absolutely.
Just call us and throw things at us because we're happy to help.
Yeah, and there's a million different variables and a million different scenarios. Now, one of the questions, I want to jump into the questions
Sure.
because I actually had this conversation last night, and I think it's I think it's valuable. I had an agent call me up and they said, "All right, Scott, listen, I need your help with something." I said, "Cool."
Sure.
He said, "I got a VA client eligible for a VA loan. He was exempt from that funding fee because he had some service-related disability, and obviously no down payment, no mortgage insurance, and
Sure.
he wants that loan, but he also wants a condo."
Okay.
Clients looking in the Cuyahoga County area, and in order, as you know, obviously, in order to do a VA loan on a condo, the condo has to be VA approved. And
Which
the
the
number,
list, is it extensive, the list?
Poquito, I believe would be the
Poquito,
word
all right.
to use, right? So, it's I think there were 9, and unfortunately, with what this person wanted, waterfront, whatever, none of the 9 met there. So, the agent called me up and they said, "Look, what other options do we have?" And I said, "Look, we could do as a primary residence, we could do a condo
Right.
loan, conventional, 3% down."
3% down.
And he said, "Hey, he's not going to want to pay that mortgage insurance. Is there mortgage insurance?"
Yes, there
And
is.
I said, "Yes, there is." Now, he said, "Well, I heard some programs have no mortgage insurance."
Okay, we have that program.
Yeah, and it's half a scam. So,
Yeah.
look, lender-paid mortgage insurance is a marketing gimmick, right? You pay a higher interest rate. The higher interest rate's with you forever. The mortgage insurance will come off eventually, right? Certainly on a primary
That's why you
residence.
don't hear us talk about this product much, because even though we do have it, we not almost. I haven't had an opportunity yet to really push somebody into doing that product because it was better for them. It's always that the interest rate is ridiculously high.
Yeah, the math just doesn't make sense for people. So this is the conversation I had. I said, "Look, I understand he wants to use his VA benefits, and good, Lord knows he earned those, right?
Sure.
Blood, sweat, and
Yeah,
tears.
absolutely.
Earned those. And I understand he wants a condo. What my man's going to have to do is decide which one he wants more. All right, and so now we're talking needs versus wants, right?
Right.
So what is more important to you? No mortgage insurance and no down payments, or a condo?
Right.
And that's a personal decision. There's no right or wrong there.
Yeah, but that's such an important conversation that I think that people in our industry and home buyers as a whole and sellers miss.
Absolutely.
Right. This is something that you need to really, and it's not something that you can come up with the answer right away.
No.
It's something that you should think about, but it's important to really look at those wants versus needs and to understand that even though we want certain things, the reality of things, it might be different.
It
It's like
is
the
what it
Rolling
is.
Stones song. You can't always get what you want, and that's the case. And it's not just with VA loans. It's also with the type of property that you want. The same problem would happen with an FHA loan.
100%.
FHA and condos don't like each other, right? There's
Same thing.
there's a poquito,
Yeah.
like you say, list that are the condos allowed. And guys, it's very important to have that conversation amongst yourself. It's important to have that conversation with your real estate agent to understand what you can get out there, and obviously with your loan officer.
Absolutely. Now, the one thing I did bring up to him was there are some condos that look like condos and feel like condos, but they're technically single-family homes.
Okay.
In Lee County, I brought up Park Meadows, I brought up San Simeon. So I told them that there are some properties that might give the buyer the condo experience, if you will, that they're looking for.
And
yet
price.
it's technically, yet it's technically a single-family home. Therefore, you could definitely do a VA loan on that.
So how do we know if a condo-looking house, it's a single-family home or a condo?
Well, it's funny. So the agent said, "Oh yeah, I got to look for a townhome," and I said, "A townhome's not a legal classification."
No.
So, if you go to at least in Lee County or Cuyahoga County, right? So, Lee PA, LeePropertyAppraiser.org. If you pull up the address, it has the DOR code. That stands for Department of Revenue. And under the DOR code, it will either say single-family residential or condominium. Another trick, if you look into the legal description, all condos will have the word condo in the legal
This
description.
is a declaration.
Absolutely.
It has to say condo.
Absolutely.
So, and it's the same thing in Collier County. And if you're having any trouble finding it, just shoot us a quick text.
Yeah.
Because that's something that we do all the time, and that's something that we're going to do when you are FHA. And keep this in mind too, if you're out shopping, if you're FHA approved and VA approved, you're probably better off not looking at condos. But if you absolutely like the one condo, send it to us or look at the legal description and make sure that it doesn't say condominium in there.
Absolutely. Now, the other question, I think you got this one, was size of down payment, right?
Yes. So somebody calls me and says, "How much down payment should I put?" I have X amount of dollars to work with, and I don't know what to do. Should I put 20%? Is it always 20%? Is it always the minimum? What should I do? And unfortunately, and I know we do this a lot, but unfortunately, the answer it depends.
It always depends.
It depends on their particular situation. It depends on what they want to do with this house, and like we were saying before, it depends on what the exit strategy is. How long do you want to stay in this property? Does it make sense to put enough down payment to get out of mortgage insurance, or who cares, right? Let's get a very small mortgage insurance and just. As long as you don't stay in this property for X amount of time, it makes sense for you to do this. What's going to happen with this property? What's the appreciation going to look like in 5, 6, 10 years? And all of this analysis we provide to our clients, because it's very important when you're making this decision. We need to look not only at your situation in particular, but also the house itself, right?
Right, and now and then at that point we got to put on our financial advisor hat, right? So because I actually had a similar situation.
Yeah.
They were buying a place for like $250, and they said, "I could put down 100 or 200. What should I do?" And the financial advisor kind of piece of my brain, and I'm not a financial advisor, but as far as a licensed one, but hey, all right, so we're debating between 100 and 200 grand. If you put down 100, what would you do with that extra $100,000, right? And can you earn a better return?
Right.
My brother and one of my closest friends are financial planners, and look, I mentioned to my financial advisor that I was overpaying my 3.5% mortgage, and
they were crazy.
Yeah, Corey lectured me for an hour, right? So it really, you got to look at the whole thing. What are you going to do with the money outside of that? I probably have told you the story, but I did a loan for 2 teachers, and they whittled down their, they lessened their down payment, used the extra money to pay off their cars, freed up about $800 a month. They put that $800 a month into like a mutual fund with Vanguard, did that for 7 or 8 years, and it improved their retirement situation by like 300 grand.
Right.
So, I don't ever apologize for saying it depends, because and that's the thing, it always depends. And that's where having a proper conversation has all the benefit in the world.
I'm doing a loan for a couple right now. They're self-employed. There's no 401k. There's no retirement accounts, right? And they have a good down payment to put down. So they call me and they're like, "We want to put 35% down," which is fine because that's the house where they want to live and whatever. But as I look through their tax returns and as I look through their finances, I'm asking them, "Do you have any retirement accounts? Do you have anything set up for the future?" Right? And the answer was no. So then we had that conversation of, okay, is it better off? Your cash flow difference is going to be, minimum. It's going to be $20 more a month, $30 more a month, and then you can use this money to start setting yourself up for retirement.
Right.
So I think it's so important to really look at the whole picture. Right?
Absolutely.
And a lot of times too, maybe instead of buying one house, you buy a couple of properties with that down payment.
And look, maybe, I talk to clients a lot about this, I know we both do, about the livability factor. Sometimes the spreadsheets say, don't put down all that money, but somebody says, I don't care, I'm more comfortable putting it down. Cool, at that point, they're making an informed decision.
Correct.
Like, that's the win.
Yeah.
The win isn't that we help people make a decision one way or another.
Right.
The win is that we help people make an informed choice. And to me,
a lot
that's
of
the benefit.
And a lot of times, the conversation just drives us there. If you ask why you want to do this and where you are and what you're going to do with your money and all of this, and the answer is, look, my number one priority is to make sure that payment is as small as possible.
Then
okay,
that's it.
Fine.
That's it.
That's the end of the discussion.
Absolutely.
But like you say, it's important to understand the cards that you have on the table, understand the options that you have, and why one would be better than the other. Same thing, and it comes down to that for all the questions that we get,
Absolutely.
right? For the VA house or a regular conventional loan for a condo, or for a HELOC versus a refinance. As long as you know why you're making the decision you're making, that's powerful.
And that's the trick. So look, that's what we got for you this week, man.
No, speaking of knowledge is power, what do we have now? We have our we're launching our video library.
Oh, that's right,
Yeah.
man. How did I forget that? It was my idea to mention it too. So, all right.
No, it wasn't.
All right, so look, man, if you want more information, I have launched a comprehensive video library on floridamortgageexpert.com. I have a total of about 150 videos that are going to get edited and posted. I have 20 or 30 of them up there now. I have an entire page on FHA. Just yesterday, I had a phone call. I'm going to have a third page that's being built now on first-time home buyers. So please go to floridamortgageexpert.com. You can register there. You'll get notified of all the videos when they come up, and it's just going to be a great resource. And
that's right. I'm doing the exact same thing on YouTube. I'm doing it in English and in Spanish. And what we're doing is we're not only putting different videos on the things that we talk about all the time, but we're going really product specific. Like he was saying, we have an entire playlist or page on FHA loans, on VA loans, and we're also going for the buyer's profile. If you're a first-time home buyer and you don't know what to do, we're going to have a whole page on first-time home buyers. If you're a veteran, we're going to have a whole page on veterans. If you're thinking of maybe going from your first-time house or your small house to another home that's maybe a little bigger, we're going to have something for move-up buyers. So it's really something for all buyers out there and all good loans out there, and some misconceptions as well. We're going to talk about
100%.
down payment assistance. We're going to talk about a lot of things like that. So check it out. Check out his page. Check out my YouTube page as well. I'm going to put the link in the description on my side. I'm sure he'll do the same thing. And then if you can think of maybe a profile of a buyer, or if you can think of your particular situation that we're not addressing, or any video that we're not addressing, please let us know. Because not only we would love to do that video for you, but we also have in our Fearless Influence, we can bring people that can talk about these topics and anything that has to do with buying houses. And really, like he says, we have contacts in the financial world as well. So anything that has to do with anything financial, we can bring somebody in and talk about it.
Absolutely.
So thanks for tuning in, and please keep sending your questions.
Yeah, we'll see you next week, guys. Take care. Bye-bye.